Now let's head to Egypt. The country's foreign reserves have hit $36 billion. This is the first time reserves have matched pre-2011 levels. At their lowest, they were at $11 billion. Now, aggressive economic reforms in the past 2.5 years are credited for the increase. The reforms, although hailed by the IMF, have left many Egyptians struggling with reduced buying power and soaring inflation. Now, the austerity measures include subsidy cuts and the flotation of the local currency. However tough, they were necessary to secure a $12 billion loan from the IMF. Now, CGTN's Yasser Hakim joins us in Cairo with more on this. Yasser, welcome to the show. Now, analysts do say that the rise is probably tied to the IMF payment and certainly an improved trade balance in the country. What exactly is behind this jump in FX reserves?
Well, like you said, the trade is important because Egypt is trying to push down the number or the rates of imports. Egypt imports 80% of its needs, and it has been pushing it down and trying to increase exports. And this has helped in saving a lot of foreign reserves, foreign currency. You've got the IMF loan that has just a second batch has been received last month. And then you also have treasury bills. The hard currency or dollar treasury bills have garnered in around $4 billion. So if you look at just 1 month from June to now, the foreign reserves jumped by around $5.5 billion in just 1 month. And this led to higher, to reach this positive level of $36 billion. You've got also the FDIs, the foreign direct investments, which have reached around $8 billion this year, surpassing the expectations, which is also positive news at this point.
Now, Yasser, does this mean the country's currency problems are now over?
Not really. Numbers are good, but if you look at it, treasury bonds, it means you have to pay back this money after a few years. The IMF has to be repaid. There are loans that needs to be repaid as well. But what it's doing is that it's giving Egypt the time and the leverage to start increasing its own revenues. So Egypt now has bought a lot of time. And what it needs to do is try to increase hard currency revenues. What are we talking about? We're talking about tourism. It's up by 34% in the last year against last year, this month against last year, but still low. If you consider it used to get around $20 billion, we're still talking about $8 billion or $9 billion per year. And that's low comparing to 2010, for example. So you need more tourism revenue, you need more FDIs. Egypt is targeting above $10 billion a year. We're talking around now about $7 to $8 billion. So there's still more that is needed to be done for FDIs. You need to increase exports. Egypt's exports are very low if you compare it to also before, but it is on the right track. And what we're saying is that the new investment law that is being ratified right now and to be adopted will help in that. So it's on the right track, but it's not solved completely, like you're saying. It will need time, but at least the government has the leverage now to go and work on these three issues quickly and try to bring revenue to the country.
Now, Yasser, contrary to what you said, the Prime Minister did say that this means that the economy has recovered. Now, with a weak currency, like you mentioned, and certainly inflation above 30% now, how do Egyptians feel about this news?
Yes, the numbers are good. You've got 4% targeted growth, annual growth. Egypt is reaching that number and could exceed it next year. There is a recovery in the economy, but still the inflation is less this month than before. It was 32%. It's now in the 29.3%. So it's going down, but the people still don't feel the major difference. We are on the right track, or the government is on the right track, but yet the prices are still high on the Egyptians. The government has been working on social security projects, has been increasing the payment and the income for the employees. It has raised wages, but yet the government is saying Egyptians have to wait maybe until next year, will they really start to feel the difference in their life. The Egyptian pound has stabilized, but is still weak against the dollar. So if we're talking, the Egyptian pound is around 17.85 to the dollar. The government is targeting that it goes to 13 Egyptian pounds to the dollar by 2018, the second quarter of 2018. So it is on the right track, but yet the Egyptians are still waiting to feel that impact on their daily life. And this could happen maybe next year.
Well, many thanks, Yasser, for those insights. Yasser Kim joining us there in Cairo. Now